Right. Uh, Welcome everybody to Insights from Onfido and Forrester. Today we are talking about staying ahead of the regulatory curve. I'd like to introduce our speakers today. So I'm the moderator. I'm Charlotte Hall. I'm a senior legal director at Onfido, and I look after all legal matters in the EMEA and APAC region with an increasing focus on regulatory and policy. I'm joined by Andras Cser, from a guest speaker from Forrester. Andras, would you like to introduce yourself?
Sure, I'm a vice president and principal analyst here at Forrester. I look at fraud management as well as AML, anti-money laundering, and know your customers. So delighted to be here. Thanks for having me.
Thank you. And we've also got Julien Rizzo, who's a compliant IDV expert. Julien, would you like to introduce yourself as well?
Yeah. Hi, everyone. Thanks for having me here today. I work within the product team at Onfido, specifically within our fraud signals and compliance group, which means I work with different cross-functional teams across Onfido to build our product platform to meet regulatory needs in different markets for our customers.
Thanks, Julien. So moving on to the topic for today. What's happening in the world of compliance? We're going to shape this talk into three sections. So the first thing is to talk around how the EU landscape is quite fragmented at the moment. We'll then move to looking at approaches to remote identification today, and then following with the future of EU compliance and also harmonization of electronic IDs. So the first question being a fragmented landscape, how have we got here? I'm going to take a step back and just talk a bit about remote identification. So the anti-money laundering regulations were around into the early 90s and were very much focused on in-person interactions and in-person identification and verification. What's happened, obviously, over the years is that remote identification has gone from being something that, if you look at the diffusion of innovation model where you have the innovators, the early adopters, and the fast followers, it's gone from being something very innovative that some market leaders are looking at to actually being essential with the surge of remote identification during COVID. With that, there's also been a surge in the complexity and sophistication of online fraud. And so while there are huge benefits to doing remote identification, it's convenient, it's efficient, it raises cost savings, it's accessible, it's scalable, it's secure. The nature in which it's carried out has to be really robust, really, really security focused, and ideally, as we'll talk through on this webinar, harmonized across different territories and different regions. This map here shows a number of regulators across different regions. While we're here to focus on Europe, because that's where a huge amount of change in regulation is happening, it's important to highlight the involvement of these different regions for two reasons. First off is the Brussels effect. What we see is that different regions tend to follow Europe, which is a leader in regulating. So, for example, with GDPR. And the second point is that very often we have global clients who are looking to move into Europe and want guidance on how they can navigate what is a very complex and fragmented framework. So Andras, I'd love to get kind of your input on fragmentation, both globally and European at this kind of early stage.
Sure, yeah. So I think the fragmentation can be attributed to a number of factors. To me, the most kind of important kind of factors and that drove and caused this fragmentation obviously were the following. So number one, not every country and geo had been equally or evenly exposed to money laundering and its impacts, right? I mean, there's countries that are a lot, hotter for money launderers, whereas there's been a more concentrated activity of money laundering because of just better level of maturity of that country's financial system, bank transfer, money movements, etc. So that's one reason. The other reason, right, is that the customer expectations, right, and what ease of use and ease of transactions means for customers, typically in banking, but in other verticals as well, has great variations across the globe, right? If you ask the US consumer to work with what you have to work in a Hungarian or an Estonian or Czech or German banking customer has to work with, people would be leaving US banks in droves, right? If they enforce the same level of onboarding standards that a European bank would typically be obliged to by the regulator. So that's the second thing, right? So there's differences in customer expectations as well. And I think the availability of technology, or the trust in technology, the trust in the accuracy of online digital technology, such as taking pictures of driver's licenses, national IDs, passports, and then comparing these to selfies, have had different kind of reputations in different geos, right? So these were not like uniformly, oh, everything is secure, we can use these things to the same degree, right? So I think these are some of the root causes. And then COVID really had impacted each of these geos to different extents, right? Some countries, the lockdown effect was so big that you had to kind of come up with some level of a digital onboarding mechanism, no matter what, because otherwise the whole bank would have stopped, right? There would have been no new customer acquisition. So that's one thing. And then the technology and AI improvements, right? Again, the starting point in data science had not been the same in each one of these countries, so that caused some elements. And then what I would also say lastly is that there's vast differences, right, as to how various financial environments, right, financial services environments work. I mean, Swift and really is probably the only common denominator that you have across the globe in terms of how banking works from the legislative perspective and the transactional perspective. But other than that, things can be vastly different. So the regulators have also this to take into account as well.
I think that's hugely helpful, and you're pretty much summarizing the daily challenges that I face in my job in terms of different countries. And we see it, for example, in Austria, in terms of the NFC chip penetration, the recent legislation calls on a separate process for that for the other, but we then realize that non-NFC documents are hugely prevalent, and they're a huge proportion of it, and there's a gap. And it's a lot of we've reached out to external advisors, and we've tried to speak to regulators as well. And exactly to your point earlier as well, when COVID hit, people had to do these quick fixes. So we've had sort of very small, short, quick notices, code seals, mini regulations issued that are just too light in detail. They are just trying to get people across the line, and it's just completely rife for interpretation. And it's quite comforting to me. We've had to reach out to a number of external counsel in some of the areas that we're going to talk to later on in different countries, and they said exactly the same thing: is that actually no one knows, and sometimes the regulators give different answers to different customers, and that can also be based on the kind of the tech infrastructure and the use cases. But it's incredibly hard to say with absolute certainty this is 100% what they want. So yeah, with that in mind, I'm going to turn to Julien and talk about, with this fragmentation and some of the general chaos of the market, if you are looking to remotely onboard some users, what solutions are you going to be facing?
Yeah, it's a great question. Unfortunately, it's not as straightforward as we would all like. And so based on the current available legislation, as well as the increasing adoption of IDV proofing standards such as ETSI, there are roughly 3 building blocks that you need to think about when building a compliance solution within any given European market. One of the most common ones, and the ones which are available in every country, is whatever the regulator has decided is their preferred or accredited IDV solution. So in the likes of Germany, this might be, say, video calls with an actual agent, where you have to present and spend 5 to 10 minutes proving your identity over a call, joining a queue, obviously quite costly, and can be quite a frustrating process to go through. On the other hand, you have other regulated markets where more classic remote IDV is performed using document-based verification combined with the biometric verification, and is very much within, say, Onfido sweet spot and many other players out there. Then you have two further mechanisms, right? So under the IDIS regulation, there is a component called qualified trust services. Essentially, there are certain providers called qualified trust service providers that offer specific trust services that enable cross-border transactions to occur within the EU. One such service is called a qualified electronic signature. So essentially, this is the same as an electronic signature that we maybe all know and love when you sign documents remotely, but it adds a much, much higher bar in terms of the verification that is performed, as well as around the issuance of that certificate, right? And what this means is that if you can leverage a qualified electronic signature, it has the same equivalence as an in-person signature and needs to be recognized across the EU, right? So that's one mechanism. And then the third one is EID authentication. So under the IDIS regulation, essentially all EU countries were encouraged to offer EIDs to their citizens, and specifically for the initial purposes of kind of accessing public services, but that leave the route open for certain organizations. For example, a number of banks in the Nordics have built, for example, bank ID schemes, which allow you to authenticate with other services using, say, your original KYC credentials from onboarding at a bank in person. And so these are the three main options that are available as a general rule within the EU. But what we find is that when you go and drill down to the per country level, different regulators allow for different solutions to be used. So maybe we can move on to the next slide where we can talk through some examples together. Yeah, so just at the highest level, we're just going to talk about Romania, France, and Germany, just to give you a sense of the level of complexity that might exist if you were, say, trying to operate across all three countries. Now, Romania has recently adopted the ETSI ID proofing standards and incorporated this into their national regulations around doing remote IDV. And so actually in this case, it's pretty straightforward. If your solution is audited and conforms to the ETSI ID proofing standards, which you get through a conformity assessment body that is set up to do these kinds of audits, then you have a compliant solution. In contrast to, say, France, where there are currently two options available to you. France has pushed forward on essentially their own version of ETSI ID proofing standards. It's called PIVOT. Roughly, at least on the outside, these things may seem equivalent, but they do have two important distinctions in that the PIVOT certified IDV tends to have quite a bit more friction in terms of how it's guiding the user through the capture of the evidence. This may not be as accessible as other solutions, and quite prescriptive on the verification aspects, in that a human needs to be involved in every verification and doesn't, obviously leaves the options open for partial automation, but not full automation. That directly impacts the cost as well as the turnaround time that consumers, that can impact your end users. And then the final component, and probably one of the most controversial aspects of PIVOT, is around the hosting requirements, or the sovereignty requirements around where you host your cloud services, and those being more tightly connected to France itself. And so some organizations or some vendors are proposing this alternative, which is around, say, leveraging a qualified electronic signature with an ETSI certified ID component. It remains to be seen in terms of which of these options will gain wide adoption. It's still both of them are still pretty new in market in France. And then finally, we come to Germany, where, as I mentioned earlier, the main, let's say the national accredited solution there is quite a cumbersome video call. And but fortunately, there are alternatives available, not necessarily as widely deployed, unfortunately, but leveraging something like much like France, you can leverage QES and ETSI certified IDV. But that is not enough for the German regulator, and they want one additional assurance step. And what they will do is impose a micropayment being made from one European bank account to another. Of course, that has implications, for the unbanked, or maybe people who've recently coming from a different country. How would you actually access that kind of service? You wouldn't initially have an EID either. And so, video call is unfortunately going to be your only option if you fall into that bucket. But hopefully, over time, we can shift people to more remote and automated mechanisms. And then the final option for Germany is leveraging EID. But unfortunately, due to how it is implemented in Germany, and the use of a PIN that you need to remember from when you first registered or got your EID, this tends to fall flat very sharply in terms of adoption, right? So users are confronted with not understanding how to use it or authenticate. Until such time as these usability challenges are overcome and these actually get scaled properly within a population, EID is just not quite necessarily there yet in certain countries. Like I said earlier, the Nordics is actually quite advanced on EID, but it's a bank-led scheme. But in terms of national schemes being applied within this AML context, we're still a little while away from that.
Thanks, Julien. I think I'll add from my perspective, what we see as a key consideration from our customers is really it's the user flow, drop-off rates, ease of integration. And that means with Germany, as you've highlighted, being so full of friction, that very often customers adopt one solution for Germany and then one for the rest of Europe outside of Germany. I'd love to get Andras's thought.
Definitely. So
Germany, France, Romania, Europe in general, in terms of protectionism, friction, lack of friction.
I mean, to me, this looks like a state-sponsored version of the battle of the videotape standards, basically, from the early 80s, right? I mean, this is like very, very obvious, right? That you are facing an environment, right, where there are countries that have been doing quite a bit in terms of digital identity, right? It's a central digital identity scheme, but there's been maybe a physical identity card with an NFC chip in it, or a certificates embedded in the chip, or like a card reader based type of physical card reader, contact based card reader based solution. Estonia and other countries have been doing that sort of thing. So there's again uneven starting points for this whole kind of evolution here, compounded with the COVID generated kind of rush to onboard people, with some Mickey Mouse or impromptu types of solutions and the rush, right? And then obviously QES versus EID, right? Battling there. So electronic identity, EIDAS, is definitely a set of standards and agreements that will have a large following, if you will. I think that notion and that digital identity that also goes beyond just AML, goes beyond compliance, I think has a pretty good way of at least helping and supporting a common platform. Obviously, the qualified electronic signatures, QES, is another standard that will likely be adopted out there, especially for transactions like contracts, as well as signing off of banking transactions. But the identity verification part of QES will probably have to integrate with EIDAS as well. So I was kind of hoping that the slide was going to be a little bit more kind of uniform and reflecting fewer differences and unevenness, but apparently we still have at least 3 to 7 years to go before all these things will be harmonized and unified. I think there's a lot of kind of national government kind of thinking here as well, that no government wants to give up any kind of development and achievements they've already had in the digital identity space. And those things will have to, these existing standards and achievements will have to be harmonized / retrofitted with, eIDAS as well as qualified electronic signatures, if it's possible. So I think we're going to see a lot of wrapper kind of talk, a lot of wrapper products in this space that will kind of allow, governments and citizens of their government of these countries have their cake and eat it too in a lot of ways, So, but it's not going to happen fast by any means.
And this really does underscore the need to make sure that, when thinking about solutions or IDV platforms, ultimately you're going to have to be able to orchestrate compliant workflows for every market that you want to operate in, potentially different workflows for the different products because they might be regulated differently. And then you're also going to have to demonstrate compliance when in a given market, following the requirements of each regulator. Some regulators, for example, in Romania, they have an explicit application and approval process to be able to do remote identification. Other countries, so like Spain, the regulator has outlined the requirements, but there's no formal approval process, right? You can get your external auditor to conduct a form of a conformity assessment and give advice on whether you've met the requirements. But ultimately, the regulator could choose to have you audited at any time. And if they feel based on that assessment that you are falling short, then come the fines. And so it's going to be really important that the solutions you pick are able to support in demonstrating that ID proofing is indeed compliant, and having those conversations with regulators. Yeah, and then the final point, of course, is the trade-offs, right? So, some of these solutions like video call, lots of friction, very high cost, not the best user experience, but maybe, it is compliant. But you may choose to target that for a specific market, like Charlotte was saying earlier. But if you really are considering how do you balance, approving the maximum number of users versus maybe the amount of fraud that you're seeing, right? Depending on which market you're operating in, you might see more fraud, and willing to take the trade-off by having a higher friction a solution that impacts approval rates to minimize the losses and fines associated with most fraud. And then, of course, just, really trying to get as many users through the door as cheaply and as fast as possible are going to be factors that you're thinking about as well. And so having a solution allows you to balance these trade-offs while maintaining the guardrails of compliance is a very important consideration if you're operating across multiple EU countries.
And there's always like just having gone through some of the EU, Europa.eu, website contents on EID, EIDAS, and the whole, notified EID processes, right? There's a fine line between, mandating something or making something a recommendation, right? As in the standards world, something that's optional has a lot lower chance of working on interoperability than something that is basically pushed top down, right, as a mandatory standard. So that is an obvious, challenge here, that every country, kind of has the ability and the freedom to interpret some of these things relatively liberally. Much more liberal, in my opinion, than is needed for any meaningful level of interoperability of trust between countries.
Yeah. No, I think with some customers as well, we see just a difference of risk tolerance and risk approach. Some of them read the whatever regulation or directive they're working with letter for letter and say this is how it has to be interpreted. Other ones take a far more relaxed approach, not fussed about engaging with the regulator, are quite confident. And then, we support customers from all different spectrums. So we've got your traditional banks, your kind of your fintechs, your neobanks. We support crypto companies. They definitely tend to be more on the other side of being a bit more relaxed, but they will have to start being more diligent with the incoming MiCA Act, which I think brings us quite nicely onto our next slide on regulatory changes that should be expected. So we've just done a bit of a color coding here to talk about a few ones that are coming through. So if you operate in the remote identity verification space, or you remotely onboard your users, what you should be aware of. So at the top, digital identity, we have got IDAS2 and specifically the EU wallet concept that is working its way through Brussels at the moment. One of the really critical things about this right now is discussion of whether this is going to be free or on a per charge per user basis. We've got lots of different feedback from lobbying groups, from different industry voices, from different member states. And I think the position has certainly shifted. It was initially going to be free, but as some member states have delved more into this legislation, what we're hearing from Brussels is that they're saying this isn't going to work unless it's on a fee model basis. We've also got the AML regs. As we mentioned before, that the regs have maybe been not prescriptive enough and have allowed for far too much variation and discretion across member states. The change to the AML regs, so 6, and the AML directive that's coming through is that it's going to make it mandatory. It's going to be far more prescriptive on what companies have to do, what member states have to implement, and it's taking the form of a regulation, not a directive. Which, if any of you know about GDPR, the General Data Protection Regulation has direct effect and therefore is far more effective at ensuring harmonization across Europe. I mentioned MiCA for any crypto listeners out there. MiCA is going to be coming in end of next year, and it basically uplifts the crypto industry to higher money, so AML and CTF, so counter-terrorism financing standard. It's still very much in a consultation transition period right now. Various guidelines and standards are being discussed. It looks like they're going to incorporate the EBA guidelines as well. So this is an area that we're watching quite intently. And we've also got the AI Act. And now this impacts remote IDV providers because generally the AI machine learning models help drive this technology. It makes it quicker, more accurate, more efficient. And there is a real focus on whether the use of biometric verification is going to be classified as high risk, which puts a very high compliance burden on providers. And it's something that we at Onfido are actively working to explain why it's not appropriate in this specific context. Moving on to the standards and guidelines, we've highlighted ETSI, which we've mentioned before. So ETSI, the standard setting body, have issued 2 standards in relation to remote identity proofing. And we've also got the very recent EBA remote onboarding guidelines, which are meant to be going live in October, so in a couple of weeks' time from now. We are looking to see how different countries are implementing this, and exactly back to Andras's point, we are seeing some making it mandatory, others who have said yes, they are compliant when actually in fact their legislation isn't. So again, we still have a patchwork here that we're working through. And the last one to talk about is just to reference cybersecurity, because there has been a bit of movement in this space. There's a few things going on. There's the Cyber Resilience Act. We've got the ENISA Cloud Services Certification Scheme. We've got the NIS2 directive. I'm not going to go into too much details on that, but they are also regulations that they're having subject to a bit of change going forward in the next few years, and something that both suppliers and customers should be aware of. Andras, anything you want to highlight from looking at this landscape of what
absolutely. So, I mean, the digital identity, we covered this. Hopefully, there's going to be additional work and really harmonization done with physical document cards, identity cards, as well as the digital ones. The e-wallet, I really have high hopes around that being, really workable and then offering a true decentralized digital identity or sovereign digital identity scheme, right? Because this whole kind of interoperability, as well as trust transitivity framework and requirements really mandate that identity has to be based off of decentralized digital identity standards, such as the W3C DID and verifiable credentials markets. On the regulatory side, I mean, AML regulators are never going to relax their requirements, right? With all things going digital. We've seen in the 6th AML directive things like the broadening of the liability for transactions, the penalties being dual, both the originator and the destination. banks can be implicated. The penalties have been increased for minimal penalties have been increased for money laundering kinds of activities. So and more informally, we see regulators becoming a lot savvier and a lot more wanting to know technical details about solutions. So it's no longer financial institutions kind of going through these hundreds of kind of questions and self-attesting, check boxing, that we do this type of things. But regulators are increasingly asking about things like model governance, fairness of models, as well as technical implementation of how these onboarding, KYC, watch list management, screening processes work in reality, right? So kind of providing a long list of yes, we do these types of answers, 300 times is less likely to be satisfactory for the regulators.
Thank you. I think we're going to move now on to some Q&A. So looking at some of the questions, first question to both of you, probably to Julien first. I run a global financial company based in the US. In your opinion, which are the most important regulatory standards to abide by? For example, the ones that impact most markets around the world.
Yeah, that's a great question. Fortunately, the US and the EU are kind of leading the way when it comes to identity proofing standards. We've spoken at length around the ETSI ID proofing standards, which sets out the technical specifications for different ID proofing methods, as well as the policy and organizational requirements for the companies that provide those services. We have the equivalent on the NIST side as well. So NIST is the Standards Institute in the US. And they provide guidance for both government services and public sector, public sector and private sector for specific identity proofing use cases and assurance levels. So yeah, those are probably the two big bets. Certainly here we're focused on meeting the requirements of both. They have a significant overlap, but indeed the way that you certify against those schemes is different. The most important thing is that if you can work with a vendor that is indeed compliant, you have the assurance that you're doing identity proofing to the right level for that given use case. And yeah, and as a US organization that is expanding into Europe, as we've covered earlier, it's quite complex at the moment. So finding a solution that allows you to easily orchestrate these compliant workflows, as well as being able to demonstrate indeed that you are compliant with each regulator, is a very important consideration. And yeah, could otherwise be quite costly and involve quite a bit of effort to get right.
Definitely. And we've been jumping on calls with a number of US-based customers who are asking questions and how we can assist them in navigating kind of moving into Europe. Very often they will have a European headquarters, and that's been designed based on sort of tax reasons. They are that regime itself may not be the best one to passport into across the different European countries. I know, Julien, you were going to mention a point on passporting as well.
Yeah. So passporting is essentially being able to get a license to provide certain financial products in a given EU country, and then essentially passport those rights and serve customers in other EU markets. A good example of this is, say, money transfer, right? And many organizations, like TransferWise or Revolut, operate using their European banking license across multiple European markets in such way. But what we're seeing is that as those kinds of companies want to offer additional financial products, for example, loans and mortgages, current accounts, they then come under the purview of the local regulators. And so you're back at the same challenge that we spoke about before. You have to then demonstrate compliance with the local regulation. How do you do that efficiently? How do you support and roll out those compliant workflows and ensure you remain compliant in all those markets? So it really comes down to what products you're looking to offer, And we've seen increasing some of our customers move from a passporting regime to going local, right? That is a trend I expect we'll continue to see as these, especially the challenger fintechs, want to grow and expand across Europe.
Thanks, Julien. Speaking of trends, the next question that's come through is a question for Andras. Which trends do you see as those that are going to change the compliance KYC landscape the most going forward?
So I already talked about, the regulators becoming more savvy, so I'm not going to belabor that point again. The next thing is basically automation and using some kind of digital forms, maybe an electronic ID, the national ID, or a nationally issued physical document verification that is actually orchestrated, as Julien said, as well as tied into back-end information sources, watch lists, as well as screening lists, right, of that jurisdiction, and being able to allow the bank or financial institution or any other organization to be able to ask the customer to take a picture of their driver's license or video, do a selfie, do the match, and then optically character recognize the text on the driver's license, read the machine readable zone, read the PDF 417 barcode, the NFC chip, and so on, right, from the document, ascertain that what the user provided is what's on the document, and then run the name, date of birth, nationality, the relevant watch lists and screen lists, like politically exposed persons, adverse media checks, as well as other, OFAC and other watch lists, right? So basically cutting out the manual steps of this happening really in a manual process. So basically creating a flow that is orchestrated and contains much fewer manual steps is definitely trend number 2. Trend number 3 I would mention here is, we call it periodic or perpetual KYC. So what this boils down to is either there's an event, right? There's a change event on an account. You add a new beneficiary, you add, there's a change of address, and obviously you can categorize these events, or there's a timeline-based perpetual KYC regime where you have to do a check on your users every couple of years, every 3 years. So basically rechecking the customer base against these watch lists, screening lists, etc., is definitely another trend that we see here. And then on the investigation side, providing the bank and the customer organization with a lot more tools to to use to like visually link and analyze, or use natural language processing, identity resolution, to be able to kind of improve the accuracy and the investigator experience as well, are things that we see here.
Wow, it's really comprehensive. Moving to the next question. EIDs are becoming more common throughout Europe. How long until EIDs achieve harmonization in the EU? And I think if you had a bit of a crystal ball for this question, but give it your best shot.
So if the question is for me, I'm assuming it's for me, but I'll definitely, Julien should also chime in. So I would say, the use cases will, so basically there will be like a minimum set of viable use cases, such as, maybe boarding a plane, could be, or lower level of trust, right, for which EID, electronic identities, will be usable much sooner, like maybe in the next 3 to 4 or 5 years. And then as these, qualified electronic signatures, and again, higher assurance level identities and regimes and protocols come into being, these acceptable use cases will be harmonized, right? And this is where you have to give a lot of regions, countries, and even regulators some kind of time period, right, whilst they prepare for all this, right? Because this represents quite a bit of change and obviously investment money and cost on many governments' parts, right? So 3 to 5 years before we got these more basic use cases harmonized, and I would say the 5 to 10 years before we get to like I can use my electronic identity card to open a bank account in any country by just doing a digital transaction kind of conversation. So it'll be a continuum, really.
So, Julien, do you have anything to add?
I mean, no, I mean, I just one thing that kind of popped into my mind is how we are focused on the EU here around EID, but I also need to remember that across the world, governments may choose to leverage EID to leapfrog. This happens in many cases, right? You haven't deployed, say, your classic ID issuance scheme with physical documents and that. In Africa and Asia, this might be quite popular where you jump straight to an EID scheme, right? So we know about Aadhaar in India. I would suspect that a lot of developing countries will adopt those technologies because they're cheaper to deploy and they are actually just far more secure and enable far more use cases, right? So you've seen it with mobile networks and rollouts, Europe versus other countries, like it's the same kind of thing. And so while the EU is setting some standards around EID, it will be interesting to see whether, as we move towards a global version of EID, when you think about how people move between countries as well, and how passports work today, it's going to be interesting to see whether the world tends towards something that is standardized at the global level and interoperable at that level as well, which will hopefully make it a lot easier for people moving between countries and being able to access services more directly instead of being disadvantaged just because they don't hold, say, an EU EID credential.
And interestingly, that was exactly the principles that Onfido was founded on by its co-founders. It was moving into a new country and not having any credentials, and it's an unlocking kind of identity for everybody. One last question that's come through, and Julien, I'll pose this one to you. There's a strong connection between the desire for fraud prevention and compliance. How can regulatory laws be impacted by AI-generated fraud?
Yeah, that's a very, very timely topic. So a great question. So yeah, I mean, just obviously from a scene setting perspective, there's always going to be this tension, I guess, between how far regulators want to go on defining rules from a compliance perspective in order to mitigate risk, right? So as we spoke about earlier, there's risk around that person being politically exposed. But then there's actually this risk around people, performing identity theft and say performing fraud, taking out a loan in someone else's name. And so I suspect that the regulators are really pushing for a risk-based approach. And the reason why this is important is that the landscape and threat landscape is changing all the time, right? So if you are providing overly prescriptive regulations around specific kinds of fraud that actually could change quite quickly, then your regulatory regime becomes out of date. And I think what we're seeing is them really focused on moving towards a risk-based approach for organizations to adopt. And what they'll be looking at are, have they implemented the appropriate controls to mitigate the risks of the time? So obviously the one specifically to this question is going to be around the use of deepfakes. We've seen a significant uptick in fraudsters attempting to use deepfakes. This can kind of be, presented, create a full deepfake that is then presented through a high quality screen in some way to an ID proofing process, the biometric check. And then another way to attack it, of course, is to create those kinds of streams and inject them directly into the feed of the camera that's doing the capturing. So compromising the device in some way and injecting that feed through there. And so, yeah, the prevalence of these tools are being used by fraudsters and crime rings today. And it really comes down to the ID proofing providers to kind of step up and be proactively testing their systems against these threats and then building the appropriate mitigations, whether it's on the presentation side, also presentation attack detection improvements, or indeed the technical side on the injection side, hardening their SDKs and improving the reliability. that is kind of the baseline expectation that we should all have for anyone who operates in this space now, because without it, then the entire IDV process is compromised, right? And so it's super important, and I would expect most organizations focused on this are proactively mitigating this risk right now and trying to stay ahead of the deepfake fraud that we're seeing.
Thanks, Julien. And in terms of staying ahead of the regulatory curve, I think that brings us to the end of our webinar today. Thank you so much for listening. I'd just like to go to Andras and say any final remark you'd like to make.
I mean, about the AI, after the deepfakes, generative AI, and all this other good stuff, very kind of sexy topics these days, right? I would say, yes, the problem is real. I would absolutely, agree with Julien in terms of algorithms being a lot more secure and be basically tamper-proof, tamper-resistant, right, or tamper-evident at least. That includes SDKs, and I will also add device posture checks, right, as well as part of the SDKs, part of these protocols, that you're able to actually really lessen the risk of injection from a deepfake algorithm, right? So timing, protection of the SDKs, protection of the camera, device drivers on mobile devices, etc., for the camera, microphone, etc., or fingerprint reader. These are all technologies that exist today. I think kind of tuning them to be able to withstand the attacks from generative AI/deepfakes is something that the vendors need to be on top of, for sure. Yeah, so I absolutely agree with that, with Julien's position on that.
Sick. Thank you, everybody.
All right. Thanks, everyone.
Thank you so much for having me. Thanks for having me.